there's a lot of beliefs floating around about crypto or aspirations or market hype. So, what are some of the common myths about crypto and how would you debunk them?
Sure, sure. So I do have what I feel to be three of the most common myths that I hear from people, when I hear people talking about crypto. So we'll go through those. So I have three of them. The first is that conception or misconception, if you will, that crypto is used only for illegal activity. So there was a study put out by Chainalysis. They're one of the leading researchers of crypto activity. And their report stated for the year 2020, 0.34% of crypto was actually used for illegal activity out of all the transactions. And so in 2020, the market cap, I want to say, was approaching the 1 trillion mark. So when you look at 0.34%, it was a fairly minuscule number, as well as when they looked deeper into that 0.34%, they found that roughly half of that was made up of scams. So not necessarily people using the crypto, obviously scams are illegal, but as far as what people think, drugs and, dark web things.
Hi, and welcome to the Entrepreneur Freedom Solutions Show. I have Kelly Bushane with me today, and you're going to want to hear this one. We're going to be talking about crypto, actually, crypto curious to confident. And wouldn't you know it, Kelly is the crypto confidence consultant. So we'll just get started. Hey, Kelly, how are you?
Hi, Eric. I'm very well. Thank you. Thank you for having me.
You're welcome. This is a topic that a lot of people are curious about. So let's dive in. So tell me about crypto and why is it so important?
Sure. So crypto, we'll go back to the first cryptocurrency, I think, as most people know, is Bitcoin. It was developed in 2009, and the purpose and intent behind it was to have a decentralized peer-to-peer method of exchanging a currency for goods or service. So it cuts out the middleman and makes the transactions much faster and eventually to cost much less or even be free, which, as we know, through centralized banking solutions, there's always a fee attached with moving money around. So it's pretty monumental in that aspect. And it's just to have a currency that that doesn't stand for debt. Right now, the United States dollar that's in circulation, it stands for debt. So you're carrying IOUs to your country. So it really just kind of took all of that into account, looked at the world monetary system and said, what can we do? What can we offer for a solution to the problems that we currently have in our monetary system? So that's crypto, and that's why I think it's important, and I want people to learn about it, at least be educated.
Yes, and we've talked already, and you kind of acknowledge there's like a lot of different types of crypto and all that sort of thing.
Yes.
Different coins and exchanges and other sort of ways to get involved with it. There's NFTs that people talk about, which it sort of has this, no pun intended, cloudy kind of appearance to what those things really are. But you read in the press and you know that there's a lot happening.
Definitely. And it can be really confusing, if you are just trying to Google or go to YouTube. There's so much information out there, and some of it isn't complete, and some of it is not accurate. And so it's really hard. It's hard to plow through all the information right now.
And sort through it in a way, and it would be great to be able to get it in a digestible way.
Yes, definitely.
So there's a lot of beliefs floating around about crypto or aspirations or market hype. So what are some of the common myths about crypto and how would you debunk them?
Sure. So I do have what I feel to be three of the most common myths that I hear from people, when I hear people talking about crypto. So we'll go through those. So I have three of them. The first is that conception that, or misconception, if you will, that crypto is used only for illegal activity. So there was a study put out by Chainalysis. They're one of the leading researchers of crypto activity. And their report stated for the year 2020, 0.34% of crypto was actually used for illegal activity out of all the transactions. And so in 2020, the market cap, I want to say, was approaching the 1 trillion mark. So when you look at 0.34%, it was a fairly minuscule number, as well as when they looked deeper into that 0.34%, they found that roughly half of that was made up of scams. So not necessarily people using the crypto, obviously scams are illegal, but as far as what people think, drugs and, dark web things.
Right.
So those are pretty acceptable numbers, I think, for the average person when you're looking at the big picture. What is the real purpose of crypto?
Right. And I just have to interject, and this is like a totally biased, like stark, an opinion that comes from one strong biased side, but it just feels to me like some of that government positioning of crypto for illegal purposes is kind of a ploy to try to rein it back in so it's under the control of individual governments instead of that kind of free, that non-aligned model that you talked about, that's basically cutting out the banks and the financial systems who don't like that.
You are absolutely right, Eric. Very well said. And I think anyone that's been following crypto for any period of time, especially if you followed it right back to the inception, you can see the attempts, that the government has made, as far as through regulation. I mean, there's always something in the news about the governments, in all countries, putting regulations on crypto. And they always present it in a fashion, it's to protect the investor. They're doing these regulations to protect the investor,
right?
Which is all fine and good, but like you said, why would a centralized monetary system back something that is earning to be decentralized? So.
Right. And I know that some of the biggest crypto exchanges where you can buy and sell and trade a variety of different crypto currencies, I guess you'd call it, have been working to get approvals in various countries. And I know that, some of those big exchanges have gotten approvals in like some major European countries and this and that and so forth. But then there are others that have absolutely resisted, and the US being one of them, I know. So anyway, and that's a whole level, like a level 2 kind of conversation, like this back behind the scenes kind of thing, this maneuvering that's going on. So I don't want to pull us in too deeply with that, but it's just like I'm mindful when I hear this stuff to kind of filter it a little bit.
Yes, definitely. And just on a positive note with that, we are seeing a lot of proponents coming forward, in the political scene that are very strongly standing behind crypto. So they're helping to pave the way. The bottom line is, yes, I think we're going to have to see regulation, at least in the US, and that there are people that will be working, in favor of crypto. So it's good to know. And I think that number will continue to rise.
Yes. So I distracted you. We were talking about myths, and we talked about the first one, and it's like that kind of hit a hot button for me. Go ahead.
That was my bombshell myth.
Yeah. But the bottom line there, I guess, back to, you said basically it's like that whole illegal activity thing is just a really tiny portion of all the stuff that's going on. That's not, if it's non-illegal, it's you could argue is legit.
Right. Yeah, exactly. So, and again, it's just people having the education, they can make an educated decision on their own. So, we'll go to the second myth that one of my favorites. I have, these 3 favorite myths, that cryptos are not secure. And that's another really hot topic for a lot of people. And I think that's where the fear comes in, the fear of losing their money because, they hear, oh, well, this crypto was stolen or this wallet was hacked. And, and they're very, very viable concerns. And when we take a closer look, if we're looking at the statement specifically that cryptocurrencies aren't secure, that statement in itself is the misconception. The misconception actually comes in where we look at how the crypto is stored and how it's accessed. So when we look at that, now we look at wallets, we look at centralized exchanges, right? So again, we have that centralized piece, that comes into play. So there's more than you're not the only one involved with your crypto now. So it's, again, similar to a relationship with a bank, right? You have your money in a bank, your bank gets hacked. It's not the money that was bad, right? It was the security measures of the bank. So it's the same thing. So when you're looking at wallets to store your crypto in, you're looking at exchanges to store your crypto on. Again, it comes to education and just doing some research and looking at who am I giving the elite privilege of holding my crypto, storing my crypto. And I think once people realize that there are choices and some are safer than others, I think that will really start to bring that fear down to a much more manageable level.
Yeah. And it goes to the point that's a common theme. That's going to be a common theme all along here that you already said, but and you need to be educated if you're going to play in this sandbox.
Yeah.
But the other piece, crypto can go up and down. It can swing in value, but it's not. If you have a secure way of holding your crypto, then it's not going to get quote unquote lost. If someone hacks and finds a way to grab it from you because of how you stored it, then that's a separate factor from that. Even though crypto may bounce around in value, you're still going to hold those coins or whatever tokens, whatever the right word is there.
Exactly, absolutely. And just to speak to that, again, there's another second layer of conversation, just about some of the ways that you can keep your crypto safe. And there are a lot of options, and that continues to expand, on a decentralized level. So,
yeah. So, okay, that was number 2.
Yeah.
Sounds like you had one more.
I do. I have one more. And so, again, it's another one of my favorites. Cryptocurrency is a scam. They're Ponzi schemes, they're, pyramid schemes, things like that. And so, when I started to do some research and really look into that, something popped into my head, kind of funny. It might remind people of another saying that I don't want to use, but cryptocurrencies don't scam people, right? People scam people. So when you look at cryptocurrency as a whole, as a market, as an industry, as basically, what is paving the way to a new monetary system for us, we look at people always look for a way, bad people look for a way to how can they monetize that? How can they be deceitful? How can they, take advantage of people, right? For their personal gain. And we're always going to see that. We've always seen that in all kinds of different situations. And I don't think that's ever going to change. That's part of humankind, unfortunately.
Right.
And so people will always be looking for a way, if they're devious, if, they're looking for, illicit, illegal ways to make money, they're going to take advantage of whatever they can. So, a lot of what happens is, you could have a bad initial coin offering, where somebody gets together and says, wow, every time a new coin comes out, people are really flocking, they're throwing their money at it. Well, what if we do that? And then all of a sudden we just shut it down and take the money, and, everybody's just out of luck and there's nothing they can do. So that's a really popular scam. Another one I think people are familiar with is phishing emails, where you'll get an email and they're just phishing for information. Oh, they'll get you to put in, whatever they're looking for so that they can try to get access to your crypto. And then, of course, another one is this is really popular on social media, private messaging, where all of a sudden one day this message will pop up and it'll say, all these little emojis with the congratulations and confetti and everything, and send us 1 Bitcoin and we'll send you 2. You send us 1, we'll send you 2 back. And unfortunately, that has made
Huh.
a lot of people very rich through just that one scam right there. There are so many people that fall for that again because they don't know any better.
Yeah.
They don't know it was a bad thing. They see it as a good thing. I'm going to double my crypto.
Right. So, two kind of quips come to mind. One of them is if it sounds too good to be true, take a good look at it. Think twice.
Exactly.
And,
Exactly.
and the second is like a Wall Street quip, which is there's bulls, people that think the market's going to go up, and there's bears who think the market's going to go down. And then there are hogs, and hogs get slaughtered. And so it's a kind of a bizarre quote, but the idea is, listen, greed isn't going to, like, if you get greedy, be careful.
Exactly. Exactly. And a lot can be gained, more can be gained by not being greedy. So, as I've learned, and I'm excited to share with you. So.
Yes. Well, so this is new to everybody. How did you get started in this?
How did I get started? Well, let's see. So
I mean, you must have been doing something before that.
I was, yes. So my passion way back in the olden days was tax and accounting, which is not a passion for many people. I think it's abhorred by many people, but I liked it. I like numbers. And so I got.
And I'll just interject. I mean, good advice for any entrepreneur is to take a look at the stuff that you like to do and stuff that is just don't want to.
Absolutely.
And then for that stuff that you don't want to do, go find somebody that loves it and you get them involved. And you're one of those people.
Right. That's right. Thank you, Eric. But it's true. It's very true. So I started out in the industry back in the mid 90s. But in 2006, I opened my own practice, tax and accounting practice. And so I've been doing that been in the industry for 25 years. And so in 2017, one of my clients, I was sitting having coffee with her, and she told me about how her son was getting involved in IT. He was going to be working on his master's degree, and he had met somebody who had his own website consulting company. He was doing a lot of things online. And so this person that her son knew had bought Bitcoin a few years prior and had literally become one of the, phenomenal Bitcoin millionaires.
The lucky early
early adopter. Yeah, exactly. Back when everybody was laughing and making fun, and so the brave, right? The bold, the brave for the bold.
It pays to be lucky too.
Yeah, exactly. And lucky, yeah. So he bought into it, and the more that he looked into it, he found another crypto, which is currently in the number 2 slot and has been for several years, which people may have heard of as Ethereum. And so I looked at Ethereum and I looked at Bitcoin. He was really pushing for Ethereum because he knew the underlying principles behind Ethereum. And at that point, I knew zero about crypto. That was the first I ever heard of it. I was shown how to open an account with Coinbase. So that's what I did. And I bought my first Ethereum.
That's one of the exchanges, Coinbase.
Yes, it's a centralized exchange, and it literally has one of the easiest onboarding platforms out there. So that was what everybody was using, at the time. So I opened my Coinbase account. I bought my first Ethereum, very skeptical. I'm just going to buy a little bit. And then it went up and I bought a little bit more. And so long story short, I went through that. And so what was funny about the situation was that Bitcoin at the time, I think, was like $400 and Ethereum was only 50. And right. So, even in crypto, I was bargain shopping and I went, well, her son says go with Ethereum. Ethereum's cheaper. I can get more Ethereum for the same amount of money. So I went with Ethereum. And so that's how I got started. That was my initial entry point. So what did I do? I jumped into something I knew nothing about, just on the word of somebody that I trusted, and not recommended. I don't recommend it, but yeah, that's how I got my start.
Yeah, and I repeat, luck plays a role in some of this stuff too.
It
Wasn't
really does.
a designed kind of sure thing. Yeah.
Right place at the right time, they say, right?
Right. So you're doing the crypto, and I assume you're still doing the tax accounting.
I am, yes.
Yeah.
Love my practice. Doing less of that actual, that actual work. I'm more of in an advisory capacity where I like to work, with entrepreneurs and individuals, just to minimize their tax liability. That's what it's all about, right? Having somebody just plug the numbers in is one thing. Yes, accuracy is important, but as well, even more important, I think, than that is when those numbers are plugged in, are you paying less in taxes? Or the least amount of taxes you need to.
Well, you just said you've been working with folks. So is there somebody in particular that comes to mind that you could, sort of share the transformation that you provide?
Yes, actually, I have a friend of mine. Her name is Klaus, and she's been a pharmacy manager for many, many years, and it's a very high stress job. And so, she's been looking. I think she has an entrepreneurial spirit about her. And so she's been looking for a long time of, she needs to start thinking about, when am I going to stop doing this job? It's very demanding physically, mentally. And she's getting to the point where she's thinking about, the golden word, retirement.
Right.
And so I started telling her about crypto about a year and a half ago. And we talked about it off and on. And then finally one day she said, okay, that's it. That's it. What do I do? How do I do it? Show me what to do. And so she was very curious and really just had no knowledge about it. And I worked with her very closely. And, we had been friends for quite some time. So she trusted me implicitly. And I set her up. And now she's growing her crypto portfolio. She started with Ethereum. She's added Bitcoin. She's added some other coins. And she's doing really well. She's very happy. She knows what the future holds for crypto. And so one of her goals actually is to be able to leave her job and still have a decent income. She has some other investments as well, but has added crypto to that.
Right. Yeah, I would view it. I mean, for myself, I wouldn't put all my eggs in one basket.
Absolutely not. No, and I'm not here to tell anybody to do that. Anything that you read, anyone that you listen to out there, it's a very rare bird that is really going whole hog into crypto. And some people have done it and have been extremely successful, but that's not everybody. And it's a small
Other
number.
people have had a somewhat opposite experience.
Yes, exactly.
It's not gone well.
Yeah. Exactly. And that's not worth the risk at all. Nobody needs to take that much risk. It's risk management, right? So right. That's what really makes us successful, is managing the risk.
Yeah. Yeah. Well, that's actually it makes me ask, are there some common roadblocks that people should watch out for?
Definitely. So, and this is really from my experience and obviously looking, at the world around me, of identifying what some of those roadblocks are. And so right off the bat, and I'm going to sound like a broken record, but really the lack of education and information, like credible information, like really going out there, finding a credible source, taking a course. There are very affordable courses out there, really small money, where you can get a pretty good basic foundation and at least have somewhat of an idea of, if you want to buy crypto, what are you buying? And I think it's important that people know what it is before they spend any money on it.
Sure.
Another roadblock, as I spoke about earlier, is scams.
I'm sorry, just to interject, because it's like, you should buy some precious metals. Okay, awesome. So, one person is giving you platinum, another person is giving you gold, another person is giving you tin. And if you don't know the difference, you feel like, okay, great, I'll get some of each, and they all go up.
Yeah, exactly. Good. Thank you for interjecting with that. It's a good point. So yeah, just knowing, just having some basic information. And then, again, as I spoke earlier about scams, just being aware what are some of the signs, so that when you're out there in the big world of crypto, that now you know what to look for, because you've gotten some information about that and you've gotten educated. So that's another one. And then this one is really huge. And I think we all underestimate the importance, especially when we're excited about something. You need a plan. You've got a plan. You fail to plan, you plan to fail, right? So we get excited, we want to jump in, we just want to get out there, and you've got to just take a second, even just a basic plan. How much am I going to, how much can I afford to invest? Okay, this is how much I'm going to invest. How am I going to invest it? Where am I going to buy the crypto? Why am I going to buy it there? And kind of take yourself through a series of questions before you actually take the action.
Yeah, yeah, yeah. Well, that begs the question, because you said, you didn't know what was going on when you started out. So what do you wish you'd known? Yeah, well, if you were back in that situation and you had to come to you, what would you hope that you had told you?
I would have walked up to myself, pointing my finger like that. Yeah, it would have been to dollar cost average into crypto consistently over a period of time, which is commonly known in the industry is DCA, right? You can do this with any assets, not just
So
crypto.
what is dollar cost average?
So dollar cost averaging is, for example, say you have the opportunity to buy Bitcoin at $1,000. Like right now, you say, I want to go buy some Bitcoin. You go to the exchange, you're all set up, you go to buy it, it's $1,000.
So first of all, you've
Yes.
done your research, you've gotten
Yes.
educated, you've looked at your alternatives, and in this particular example, you have used a sane process
Yes.
to determine that Bitcoin is the thing that you're going to focus on.
Exactly. You have laid your foundation, you've put your ducks in a row, you've gotten enough information to take you from curious to a more confident position, and now you're ready to buy. So you go to buy at that time. For example, Bitcoin is $1,000. You can buy one Bitcoin for $1,000. Okay, great. Here's my $1,000. Now I've got a Bitcoin, right? Well, what happens is the following week, Bitcoin drops down to $200. So now you have an unrealized loss of $800, right? You bought it 1,000, now it's only worth 200. Okay, so in that same scenario, say we had taken our $1,000, and let's just, for simplicity, let's split it up into, I'm going to buy Bitcoin over a 5-week period, right? Okay, so the first week I buy $200, it's 1,000. Next week I buy $200, it's 900. Third week it's 800, so on and so forth. So now when you add up those 5 purchases at what your purchase price was over those 5 purchases, you get an average that's much lower than $1,000. So
Right.
just by splitting that up, as opposed to putting it all in at once, you're dollar cost averaging so that you're getting a lower entry price.
Yes.
And this,
the price could go up, the price could be going down, it could bounce around, but you're spreading your purchases over a period of time, so you're getting sometimes it'll be that you're buying low, sometimes you'll be buying high, but you're not buying at just one moment and then just praying that it's going to hold.
Exactly. And something that I've learned and I've heard from a lot of other analysts is, timing the market. Like, you're never going to get the bottom, you're never going to get the top. So, you strive for that, but don't think that you're going to get it. And I've heard a lot of, don't try to time the market, look more at time in the market, right? Because if you look at longer term growth, then you're going to see those significant gains. Whereas, on the short term, there's so much volatility. In that example, you could buy at 1,000 and then next week it's down to 200. So.
Yeah. And you kind of also implicitly indicated, you said if Bitcoin's 1,000, you buy 200. So you can buy these, they call fractional shares, like pieces of a Bitcoin, if you're in through one of the exchanges, right?
Exactly.
I mean, you couldn't do it if you went out just to buy if you wanted to go out and just buy a Bitcoin, you'd have to pay, you'd buy one. But if you have these ways of buying fractions of it, right?
Yes,
I mean, that's what I thought I heard you say.
That is
correct, kind of underlying it.
Yes. Yeah. And again, that's, just thinking, oh, everybody knows you can buy fractions of a Bitcoin. And I think most exchanges, you can buy as little as $10 worth of Bitcoin. So, yeah.
Awesome. So I'm just looking at the time. We should probably think about wrapping it up. But is there a question that I should have asked you? And if so, how would you have answered it?
Yeah, actually there is. So the question would be, what was my personal experience, or what has my personal experience been like since I've been involved in crypto? So if we go all the way back to 2017 and we look at, well, I told my story, of how I got started, but what's happened since then? So if we look at that, I invested a four-figure amount back in 2017. When the price started to go up, I monitored it very closely. And as soon as I was able to, I took out my original investment. Since then, after taking out my original investment, 4 years later in 2021, I had amassed a six-figure portfolio based solely on the gains that I had made. I am not typical. These are not typical results, as the disclaimer says.
Right.
But I do know what I did, and I can help people to replicate that. Not guaranteed, but I can show you the very specific steps that I took.
This is my system. This is what I
get
do.
those exactly to get those results. And I can also share some of the mistakes of missing the top, right? So you get all these gains and you have this huge portfolio and you don't do anything because you don't know what to do. And then the next thing you know, your portfolio is down 50%, right? Same as what happens in the stock market, right? So you've got your Tesla stocks. Tesla goes way, way, way up. Your portfolio is like, totally just exploding. And then the next thing you know, Tesla's down 30%. Well, if Tesla's down 30%, then your portfolio is down 30% if you just had Tesla, right? Same thing with crypto. You need to learn. So step one is everything that we've talked about so far in this interview. Step two is learning how to preserve your gains, because that's where the real strategy comes in. And that's where you really need to buckle down and learn how to do that. And that's what I've spent the past year concentrating on, that specific part. I've put in thousands of hours into research, mentors, and watching analysts, top analysts, and really just diving right in. So now I not only, have gotten past being curious and becoming confident in crypto, but now I'm also learning how to preserve those gains so that you can continue to grow your wealth,
Right.
infinitely.
And one thing also I'm kind of hearing underlying this, this is not a passive investment system. It's like it sounds like you need to stay pretty hands-on and paying attention. Is that right?
You definitely do. And it depends how, there are a lot of different levels of participation, depending on how interested you are, right? How much you enjoy this. You may look at your first chart and go, oh my gosh, I hate this. I'm never doing this again. So there are a lot of options, that you can use that don't involve you sitting in front of a chart, 24/7. And it's just different levels. It's what you want to be doing. And there are different ways to generate that passive income. There are certain accounts that you can just, have your crypto sitting in that's just going to be earning you money every week. Or you can become actively, which would bring you into the trading piece of it. Or I think people are familiar now with the term hodling, which was a typo way back in the Bitcoin day, where somebody mistyped the word hold. And then they came up with hodl, which was hold on for dear life, which means just buy it and hold it. Just buy it and hold it, and just ride out the waves, ride out the ups and downs. So it's really about personal preference. On the individual, what do they want to do with the crypto?
And you got to kind of gauge how you're emotionally going to respond if things are bouncing around, or even, do you even want to play in this sandbox? And like, is this like, do you want to really dig in and understand the kind of the technology and the finance of it and that, or, if not, then you could say, that's really, thank you for, thank the universe for educating me, and I'm going to just watch on the sidelines here. And
That's right.
I'll, if I regret it later, then that's just tough. I'm just not, it's not for me. Or the other way around, where you're like, yeah, I want to dig in.
Exactly. Very well said. And I agree with that wholeheartedly. I'm not here to force anybody into something that, they deeply just decide that they don't want to. They've gotten the education, they've learned about it. They know as much as, they feel that they need to know to make an educated decision.
Yeah.
And, that's up to you.
Yeah. And the other piece of it, I guess, coming back to what we talked about was, I'm not going to put my whole portfolio in there. A few times in the past, I've had a business trip to a convention in Las Vegas, and so, I'm willing to play the $5 blackjack table, and what I would do is I would take like $200, which at that time was kind of big enough money for me that I thought about it, but certainly wasn't my entire savings.
Right.
I'd put that in my pocket and I'd lay it down. And then, as I played, by the way, also as I won, I put half my earnings back in my pocket again. So at the end of the time when I had nothing left on the table, at least I had something here, but it was a small stake. Was really my point. If I were to play in crypto, I'm kind of thinking I would follow that kind of a strategy. Just start with a little.
Absolutely. I mean, Eric, think back to, when I was telling how I first got started. I mean, I didn't go in and buy my whole investment all at one time. I mean, I literally started with $50, $50, I dipped my toe in. And then I did another 50. I mean, I did very small increments for, probably my first half a dozen purchases, before I put in any significant amount. And I think that's the way you have to do it. You've got to have some patience in the beginning. You've got to have patience.
Right. And it wasn't your whole portfolio.
Right.
When you did decide to jump in either, right?
Right.
Just, I can afford to lose this kind of a thing.
Exactly.
And, well, so we've gone on. People, I'm going to wrap it up, but people are going to want to know how to get a hold of you. So how do they do that?
Sure. So the easiest way, really very simple, is cornucopiacryptoconsulting.com. That's my website. I'll spell that out. That's CORNUCOPIA, crypto, CRYPTO, consulting, CONSULTING.com. And what will happen is you will be brought to my homepage where you can actually download your free 3 steps to confidence in crypto guide, which will dive deeper into the myths that we debunked earlier, as well as provide you with some other really valuable information that really can help you on your path to getting some confidence and put the curiosity at bay a little bit. And you can also contact me through that same website. There is a contact us link. And if you click on that, then that will bring you to be able to send me a message, send us a message.
Awesome. Awesome. Well, I'll tell you, Kelly, this has been really interesting and super helpful. So thank you so much.
Great. You're very welcome. I've really enjoyed it. And thank you again for the opportunity.
You bet. Okay, so bye for now.
Okay.